Hey everyone, welcome back to Corporate Decoder. Today, Otis Worldwide Corporation just filed its Q2 2026 report, and I am seeing some interesting trends in how they are managing debt and making money. Quick note, this is not financial advice, just my take on public filings for educational purposes. Service sales are booming, driving overall growth, but rising costs are eating into profits. This filing gives us a look at Otis Worldwide Corporation's financial health for the second quarter of 2026 ending the 30th of June. Let's dive into the numbers. For the quarter ending the 30th of June 2026, Otis brought in $3.859 billion in net sales. That is a solid jump from $3.595 billion in the same quarter of 2025. The real star here is service sales, which jumped to $2.580 billion, up from $2.319 billion. This shows people are relying more on Otis for maintaining and fixing their elevators and escalators. Product sales stayed relatively flat at $1.279 billion. However, the cost of providing these services also went up significantly to $1.642 billion from $1.440 billion. This means while they are making more money from services, they are also spending more to deliver them. Overall gross margin percentage for the quarter dipped slightly to 29.4% from 30.3% in the previous year. This shows that while sales are up, costs have grown even faster. Selling general and administrative expenses also crept up from $499 million to $520 million in the quarter. Despite these rising costs, net income attributable to Otis Worldwide Corporation was $428 million for the quarter, still an increase from $393 million in the same period last year. Looking at the first 6 months of 2026, Otis generated $7.425 billion in net sales, up from $6.945 billion in 2025. Again, service sales are a big driver here, climbing to $4.997 billion. But just like in the quarter, the costs have also risen substantially, hitting $5.207 billion for the 6-month period, up from $4.855 billion in 2025. This trend is reflected in the gross margin percentage, which slightly decreased for the 6-month period as well, going from 30.1% in 2025 to 29.9% in 2026. Now let's look at their balance sheet on the 30th of June 2026. Total assets stood at $11.156 billion, up from $10.653 billion at the end of 2025. But total liabilities also increased to $16.610 billion from $15.924 billion. This leads to a total shareholders' equity deficit of $5.560 billion, which is a larger deficit than the $5.346 billion reported at the end of 2025. This means the company's liabilities significantly outweigh its equity. Looking at their debt, specifically total debt was $8.436 billion on the 30th of June 2026, and cash equivalents were $813 million. This gives them a net debt of $7.623 billion, which has increased from $6.860 billion at the end of 2025. Their debt to capitalization ratio is a staggering 293%, a slight improvement from 305%, but still indicates a heavy reliance on debt to finance operations. In terms of cash flow, for the first 6 months of 2026, Otis generated $680 million from operating activities. That is a good increase from $405 million in the same period of 2025. However, investing activities used $316 million, primarily due to acquisitions and capital expenditures. And financing activities saw a significant outflow of $621 million, driven by share repurchases and debt repayments. The company continues to incur restructuring costs related to its Uplift program aimed at transforming its operating model. For the first 6 months of 2026, these costs were minimal at just $18 million compared to $80 million in the same period of 2025. This suggests much of the restructuring efforts are winding down. There is also a notable item concerning German tax litigation. Otis received a favorable ruling and expects to receive significant refunds totaling around $356 million. This has impacted their balance sheet with substantial receivables. However, there is an ongoing dispute with their former parent company RTX Corporation regarding indemnity payments related to this litigation. A payable of $55 million is currently recorded. Looking at restructuring accruals as of the 30th of June 2026, there is a balance of $51 million remaining, indicating ongoing activity, but less significant than in prior periods. The new equipment segment showed a slight increase in sales quarter over quarter, but a slight decrease year to date. More importantly, operating profit for this segment decreased significantly. For the quarter, it fell to $40 million from $68 million, and for the 6-month period, it dropped to $78 million from $134 million. This is concerning as it suggests challenges in selling and installing new elevators and escalators, perhaps due to softer construction markets. The service segment, however, continues to shine. Net sales increased by 11% for both the quarter and the 6-month period. Operating profit also saw an increase for both periods, showing strong demand for maintenance and repair services. This segment is clearly carrying the company. Overall, it is a mixed bag for Otis. Services providing strong revenue growth and profit. New equipment, on the other hand, is facing challenges with declining operating profit. The company is managing its debt relatively well given the circumstances, but the equity deficit is substantial. My biggest concern is the declining profitability in the new equipment segment. While service revenue is strong, it relies partly on new installations to feed its pipeline. If new equipment sales continue to struggle, it could eventually impact service growth. However, the company's ability to manage debt and generate positive operating cash flow shows resilience. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.